How to trade an imminent bull reversal. So this is one of the strongest signals on the iView bias. So you don't see many arrows when we look through the trade view with just the single upward green arrow. So this means that the market really is pushed down aggressively, and this could be due to technical trades, fundamental news, but it's looking that the market is heavily oversold, heavily trending downwards, and the market really wants to look, bounce some back and retrace these losses. So I have the charts open as we do, and this time instead of just having the RSI, I've got the demarker indicator on, just to show you how the markets work and how the trade view is visualized by the indicators that we put on the charts. So we've got the euro versus the pound here. So here's the 15-minute view. We can see the market's gap down. We've had some data out of the markets today. The unemployment is in the UK is better than expected. We know that the Mark Carney is linking a possible call on interest rates and hiking interest rates to the low in unemployment. So that really has meant that the major currencies have weakened against the pound, so we see this downward movement. So what we can see is that really the Fibonacci scenario here has worked perfectly well. Okay, every key support level has been a point of interest on the way down. We finally break through the 2.36 Fibonacci level, and the market heads down. So the next point of interest we've got is this weekly level down here of resistance at 0.81641. So the market really sold off heavily and come back down. We can see if we just do a quick Fibonacci from the low to the high of this 15-minute candle, that the market is touched back to the 61.8, closed significantly below the 50%, and therefore we've made a new low from here. That's how Fibonacci works. So how far can it potentially go before there's that imminent bull reversal? Well, I would say that we're going to definitely test at some point this low level here, but the next significant point of interest is not till right down here. So what I'd expect for you to look for this trade, for the imminent bull reversal, is for the market to try and break these low levels. I don't really think the market at this point will have enough momentum to do another 50 ticks anytime soon. So what it'll try and do is break down below this level very, very sharply and quickly, probably then retrace and then eventually close upon this level, and that's when you'd look to do the bull reversal, so buying back into the strength. So again, the sentiment figure before this is increasing bear sentiment leading to a reversal. So we've still got bears in the market because we're towards the lows, but they will at some point. The demarker indicator only goes down to 1, okay, so it's 6.5, and then RSI, as we know, only goes down to to 0. Anything below 30 is significantly oversold. So there will become bulls attracted back into that market and push it back up. So what we're looking for is that final push below significant levels and not find any traction or any kind of real, resistance and closing below this and pushing down. So we'll let the market overextend, come back probably to this level, and that's when you'll see the imminent bull reversal. So again, it's the strongest signal we have on the iView. It's very much the same on the other scale for the imminent bear reversal. But I mean, this is from the bullish side. We're heavily trending down, but the market's going to hit points where the attraction of bulls are going to come into the market and push it back up and find that value. And the value will be these short-term points of resistance, the moving average, and ultimately the fib levels will come back into play until a new scenario makes the fib lines redraw. So that's how you would trade this particular scenario.